So yesterday I put on 4 earnings trades. One of them, though, I did not carry all the way through the earnings event because I made a nice little profit within a couple of hours after I put on the trade with you guys yesterday morning. I just went ahead and took the win. So I bought a at the money call thing. Yeah, I bought some at the money calls, a few of them, in American Airlines, and made a quick little profit on those. Like 17 cents a piece or whatever. Had a few of those on, made like, $60 or whatever. I just went ahead and I booked that win. If I could put on a trade and within a couple of hours, make a little money, why not? Why hold that through earnings? Because the earnings, I'm either going to typically, win a little bit or lose the whole debit that I paid for those long calls, right? It's usually when you lose, you're going to lose the whole thing. Yeah, right. So I was like, well, I already got a win. I'll just book the win. So I got out of that trade. The trades I did keep for earnings, though, were Google, put on a strangle, LUV, which is Southwest Airlines. I bought an at the money put in it, so I did the opposite of American Airlines, and that looks like that's going to work out rather nicely. I was already in the money slightly at the end of the day yesterday, and then it went down another $1.50 or so. So that's going to be okay. It'd make a nice little bit on that. And then Tesla, I sold a put credit spread. This is not going to be great because Tesla's down like $22. But it's fine because this particular trade is a 57 DTE trade. I'll just sit on it for the next 2 months. It'll come back to me more than likely. So I'm not worried about that trade, and it's a defined risk trade. So Google, on the other hand, was undefined risk. So this one, a much riskier kind of play, but Google only made a $7 move up. So I'll be fine on that. I'm still going to be more than $30 out of the money on the call side. So we'll be fine. Should be a profitable trade. So 2 of these will be profitable, plus the American Airlines trade. So 3 of the 4 I should make some money on. Tesla, I'm going to be down money on, but I'm not closing it for that loss. I'm just going to sit on it and wait for it to come back to me. So, yeah, I got plenty of buying power. I could take some trades. I could take 3 or 4 trades today if I wanted to put on some things. I found something that was interesting to trade. Kind of hard to find interesting plays right now. The market should open here in a few seconds, and then we'll run down my current positions and see where we stand on some of this stuff. And we'll see where all this goes here in a few seconds because the market is now open. But we'll let that settle down for a couple minutes. Let me go back to the Discord chat. Say hi to all you guys. Any questions, comments, trade ideas, anything you want to discuss before I get into managing some of these positions, especially these earnings trades. Go ahead, if you got anything, type it. And while you're typing, I am going to quickly, I just looked over and saw my Google strangle, a 40% winner. The markets are already open as far as the option markets. Let's see if they'll book that for that 40% win. I got that closing order. That thing was a home run. Really nice when you sell a strangle, right, on an earnings play, and you get like a very small move plus that vol crush. That's it's a beautiful thing when it works out. It doesn't work out that often. The Tesla earnings trade, obviously, it's not going to work out. But again, defined risk, we're just going to let this play out for the next 57 days. I'm still out of the money on the put side anyway, so this is not I'm not in a bad position. My pop on the trade, my probability of profit still north of 50%. So it's still a trade that I'm more likely to make money in the end than lose money, as long as Tesla doesn't continue to bleed here. My LUV at the money put. Oh, damn. Up $200. Let's see if they'll give me that. I don't know. Probably some wide bid-ask spreads in LUV, though. It's not nearly as liquid as something like a Google. We'll tick it down. 191. 191 got it. So, yeah, I made, 120 on Google. Made a little, just under 200 on LUV. Tesla, we didn't book it yet. I made $60 on American. So, I mean, I made $300-400 on those earnings trades. And as far as realized, gains. And then Tesla, this will probably eventually be a winner. I know it's down today. I guessed wrong on direction with the put credit spread, but because when we sell options, for example, selling credit spreads, because we're out of the money, I gave myself room to be wrong. I was wrong, but I'm not that wrong, right? So I've still got time on that trade. So that's fine. We'll come back. I'll probably need this trade to sit here for, say, 3 to 4 weeks. And once Tesla reverses and goes back up, this will, I suspect in about 3 or 4 weeks, this will be a profitable trade. So yeah, sales down terribly worldwide. Oh, you're talking about the Tesla? Yeah. Curious about the bullish sentiment in Tesla. I don't know about bullish sentiment. Are you talking about just the fact that I put on a put credit spread? I'm just playing it out of the money. I could have sold a call credit spread too, but just Tesla is not near its highs. So either one would have worked. I couldn't have done an iron condor because the IV rank in this was not great. So I had to be directional. Which side I picked really didn't matter. Had I picked the call credit spread, I made a little money today. I'd already be out of the trade. But even with the put credit spread, I'm probably going to win on it eventually. It's because you're out of the money. Don't get too caught up on picking a direction when you're selling options, because you're going to be out of the money anyway. You're giving yourself room to be wrong on them. When you're buying options is typically where you got to get direction right. Like when I bought those calls in American Airline, I bought those puts in LUV. Like I had to get those moves right. And they had to move significantly. It couldn't be a small move. Like you got to get the move, and it needs to be a move of some importance. But short options, really, like picking a direction is the least of your worries. Like it's the least important thing. The most important thing is the IV rank good, especially is liquidity good, right? So make sure you're trading liquid options, right? Liquid underlyings. Make sure your risk reward looks good. Make sure your probability of profit is good. Typically I want to win about 70–80% of the time on my trades. Yeah, sales down. Elon, lots of money, adds no value. Their robots don't do anything. Yeah, I didn't really read the earnings report, and I didn't listen to their conference calls. That's not something I typically do because it wouldn't matter. I'm already in the position, so I just look what my position looks like today. And yeah, you're bearish on Tesla. The stock needs to go down under 150 before you're going to touch it. Yeah, but that would require this thing to lose more than half its value from where it's at, and it's already well off its highs. If you're waiting for it to get to 150 to buy it, you may never get that opportunity. That's pretty, you're really wanting a steep discount. I mean, sometimes things happen. I mean, I remember it was just, 3–4 years ago where Meta was trading under $90 a share. And look where Meta is now. Like, it's crazy. Yeah, sometimes companies do sell off a little bit, sometimes in a drastic way, and you get a steep discount. But if you're long-term bearish, because IV rank right now in Tesla is very low, if you got a bearish sentiment, one thing you can do, I mean, go to January, 6 months out, the puts, you're going to pay, $3,300 for the at-the-money put. That's a $300 stock, and volatility, even though IV rank is low, IVX is very high, and it's very expensive to buy options. If you wanted to put your money where your assumption is, I mean, it's cheaper today than it would have been a couple of weeks ago. Or you could do some spreads if you wanted to define your risk. Like if you think this thing is really going to 150, I don't know, buy the 200 put, sell the 125. You only pay $255 for that thing, but if you're right, by January you make $2,200. Basically, you're risking like 1 to make 9. Now, obviously, it's a low probability trade, but if that's your assumption, right, this thing's eventually going to be at 150, then if it gets below 175, that'd be a nice little trade. And it's actually a rather cheap trade doing it with spreads. Again, very low probability trade. The chances of that thing working out are very low, so I wouldn't put a ton of money, but treat it as a lottery ticket. You want to spend a few $100 just as FU money, as far as I know I'm probably not going to win. Yeah, do it, but I wouldn't put real money on a long shot play like that.